The math in the housing market right now is really crushing the current market, not necessarily in a good way. You know what I want to take is about 2 minutes to really go over how the entire ecosystem of every sector of the market is really challenged right now. But more importantly here is to really demystify the myth that everybody's rich. The only people who are being hurt are first-time buyers. It really is clear that we have some challenges ahead of us, and we're probably going to see policy and government try to kickstart this market. You know, to say that we're in an affordability crisis is really putting it, it's really flippant to say that at this point, mainly because home prices have far exceeded the growth of incomes. And we talked about this before, where the artificially low rates that we have for so long should have been done for a quarter or two, but not for 2 or 3 years. Because what it really created was this scenario right now. If we just go back the last 5, 6 years, I had a couple here. Let's call them Tom and Laura. Tom and Laura wanted to buy a home. They have 3 little children, and we found a starter home here, Rancho Niguel, $1 million. They're very conservative. They have $200,000 saved, 20% down, good income, about $175,000, and we went ahead, bought it. 30% of their income and their payment, you can see, is $4,400. Now, today, that same home is worth $1.6 million. On the surface, you say, wow, they have done very well. Yes, they have. Now, remember, he has a brother who didn't want to buy a home, same exact scenario. If his brother wanted to buy this home, which we've discussed, he would have to pay 1.6. He would have 20% down payment, and his payment would be $9,600. His friend is doing very well, but he just can't afford that. So let's stick with Tom and Carol, right? They did buy it. They have a lot of equity now. So now what we're going to do is do the traditional move up. If we take their current home of $1 million, they have $600,000 gain with their down payment. They have $700,000 to work with. That's a 30% down payment. They want something a little bigger, nicer neighborhood, gated community. We stumbled upon Laguna Niguel. They want to stay in the school district. $2.2 million, we found a beautiful home. When we do the numbers, his income's gone up, their income's gone up. They have 30% down payment. When we do the numbers, it comes out to $11,500 for the loan with the 3 kids and everything. That just prices me out of the market with 30% down. And he's doing well, which isn't the norm. So what we call that is, he's in an income gap. So what do both first-time buyer, his friend, and Tom, what are they doing? They're going to wait and see what happens. That's really what it is. But if we take that 2.2 million home that they were looking at, that's a gentleman here, Ali, in San Joaquin Hills. See, Ali's thinking of downsizing. Now, that's the biggest sector of the market here in Laguna Niguel, in the housing. Now, Ali and his wife, they've been here 26 years. Kids are gone, paid the house off, and they're thinking of downsizing. Traditionally, they get something smaller, something close, and have some money left over. When we start looking, because the smaller square footage homes, single stories and others, condos by the water, really have appreciated even at a faster rate. When we go through all the numbers, they sit there and scratch their head. We would have to pay $1.9 million just to get something reasonable. And the traditional thing they've been saying here for the last 4 or 5 years is it just makes more sense for us not to move. We love our home. There's no way we're going to give this up for that. And it's a physical downsize, but it's not a fiscal downsize. So Ali does the same thing. We're going to wait and see. So now we have the first-time buyer, the move-up buyer, and the empty nesters all in a position of we're going to wait and see. That's frozen the market and is becoming very challenging for the GDP. Now, which group is winning here? Well, I got to tell you, the one I've been working with the longest now, for the last 6, 7 years, are the empty nesters. You see, they've had about 25, 30 years to build equity, to build their portfolio. They're in a stage of life and their career where their expenses aren't going up, they're going down. And their whole life, they've been in a position of, like when they bought this home, it was for other reasons. But the stage of life they're in now is different. It doesn't suit their lifestyle. So after we go through all the numbers, we say, where do you want to live? And what's your life want to look like in the next 3, 5, 7, 10, 20 years? There's a lot of opportunity out there. And I can't tell you how many of those folks we've gone through where the quality of life has really been exceptional. It's hard to really think of ourselves now. We've been thinking of the kids and everything else for the last 30 years. So if you're in the position, any one of these positions, is there opportunity for? Yes. A lot of creative ideas and a lot of hoops to jump through, but it is possible with certain opportunities that are out there. It never happens overnight, but it always starts with a conversation. So if any of this sounds like something you'd like to discuss, I'll be more than happy to share a conversation with you. Well, until we meet, you take care.